More strong economic data locally and overseas, and the US delivers on their rate hike and, it seems, their tax cuts. Some closing observations for you from 2017. While our GDP growth was slightly below expectations at 2.8% growth, most of the data we've seen since then has been encouraging. Starting with yesterday's stunning jobs numbers, a net rise of over 60,000 jobs, with almost 42,000 of them full-time. It was also good to see a fall in underemployment, with average hours worked up 0.8% year on year. So the composition and quality of the job creation seems to be improving. As for when this converts to wages growth, we shall see. But until then, inflation should remain low, so interest rates will stay cheap for borrowers at the same time. It was also pleasing to see an improvement in retail sales, up 0.5% in October, and an improvement in consumer confidence. For much of this year, business confidence has been much higher than consumer confidence, so good to observe a bridging of this gap. And while the business survey didn't match the previous month's record highs, the trend remains positive for business conditions as well. Part of the reason for this improving confidence going into 2018 is the improvement in conditions overseas. It remains a global growth environment. So we can see Australia's major trading partners growing strongly. And while the USA isn't as large a part of our trade as China or Japan, their interest rate increase and the prospect of 3 more in 2018 is reflective of a healthy economy, and being 25% of the global economy, that matters. As for the impact of their tax cuts, well, it should deliver more growth again, but won't help with their debt levels, which is one of the reasons we still see the Aussie dollar in the 75 to 81 cent band for the short term, but also see stock markets edging higher. Until the new year, best wishes for Christmas and a safe and peaceful end-of-year break.